Allahu 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 Allah Allahu Allah.
Assalamualaikum warahmatullahi wabarakatuh. My name is Muhammad Faiz bin Kamal. My metric number is 272779. So for today, my group and I would like to present for our topic, that is the law and regulation of Islamic banking. So for today, I would like to do an introduction for our group assignment, that is the meaning of the law and regulation of Islamic banking. So, the original and fundamental source for Islamic finance, including the Islamic banking in Sharia law, which play a various role in different countries, whereas in several like Afghanistan, Bahrain, Iran, Pakistan, Arab, Saudi Arabia and Sudan. So, Sharia law is the fundamental law of the land, or a key source of the law of the land in others. It does not consider part of the legal framework. So, I continue. Various motivation, unlike the public policy pertaining to the place on role of Islamic banking within a different jurisdiction. In some jurisdiction, example the United Kingdom, Islamic banking is considered to be an acceptable financial innovation, whose present further promotes that jurisdiction standing as an international finance center. Other jurisdictions such as Kenya, South Africa, and Tanzania accommodate Islamic banking in view of the indirect of a substantial minority of its population to Islam and the demand for Islamic banking. In jurisdiction where the majority of the population, where Sharia law is fundamental law, and where Islam is the state, Islamic banking is typically present and sometimes the only form of bank Islamic.
Assalamualaikum and hi everyone. My name is Aina Shafika binti Masri and my metric number 267833. I would like to talk about the law and regulation of Islamic banking in Malaysia. There are several phases that involve in the development of Islamic banking industry in Malaysia, with phase 1 beginning in 1983 until 1993 and phase 2 beginning in 1994. Malaysia is now in the midst of liberalizing its Islamic banking implementation policy in order to enable us to lead the sector. This development is facilitated and supported by legal infrastructure through several legislation and directive, namely Islamic Banking Act 1983, Banking and Financial Institution Act 1989, Central Bank Act 1958 and Bank Negara Malaysia BNM and Securities Commission SC. First legislation is Islamic Banking Act 1983. IBA, which came into force on 7 April 1983, was the legal basis for creating an Islamic bank. Similar to the case of other approved bank, the IBA gives BNM power to oversee and control Islamic bank. Although the IBA leading to different interpretation is general, non-comprehensive, it observed that it creates flexibility for Islamic financial institution. This can be illustrated by referring to Section 2 of the IBA, which define Islamic banking business as banking business whose aim the operation do not involve any element which is not approved by the religion of Islam. Next legislation is the Banking and Financial Institution Act 1989. BAFIA is to provide new laws for the licensing and regulation of the institution carrying on banking, finance company, merchant banking, discount house and money brokering business, for the regulation of institution carrying on certain other financial business, and for the matters incidental thereto or connected therewith. BAFIA was introduced to provide for integrated supervision of the Malaysian financial system and also to provide the central bank with the power to speedily investigate and prosecute if necessary and any illegal activities in an attempt or reduce white-collar crime. Second legislation is the Central Bank Act 1958. CBA play a major role. IBA and BAFIA in controlling the supervisory and supervision aspect of the introduction of Islamic banking. Section 16B(1) of the CBA 1958 provide that the bank can set up an advisory council to decide Islamic law for the purpose of Islamic banking, takaful business, Islamic financial business, or any other business based on the principle and supervised and controlled by the BNM. It is expected that the effect of this amendment will ensure that all SAC deliberation are binding on the court and that all Islamic financial institutions in Malaysia should be obey them. Third legislation is Bank Negara Malaysia (BNM). BNM may issue a directive as when appropriate to banking and financial institution. The Sharia Committee Guideline and Procedure are among the most relevant directives related to Islamic banking. The IBA and BAFIA require the financial institution to obey all the guideline and procedure provided by BNM and to comply with them. As regard the governance of the SC, control the governance of an Islamic financial institution Sharia Committee. There are 10 parts with 24 sections and 1 appendix in the guideline. The content shall include the goals, scope of application, development of the SC, membership, limit, roles and responsibility of the SC, and Islamic financial institution reporting structure, effective date, and secretariat of the AC BNM. Fourth legislation is Security Commission SC. The Security Commission was set up in 1993 to be an authority for the evaluation of issuance of security in Malaysia as regard to the Islamic security which are offered by the Islamic financial institution. The Securities Commission has issued guidelines on the offering of Islamic security on 26 July 2004. By many successful Islamic security, the rules can be illustrated. The guideline issued by the Security Commission on the issuance of Islamic securities are considered to be a tool for the creation of genuinely viable project through asset securitization, although Sharia issuance also taken into account.
Assalamualaikum and selamat sejahtera. My name is Nurhanis binti Zulkifli, metric number 272493. Today I'm going to talk about the development of law and regulation of Bank Islam. We know that Bank Islam Malaysia Berhad is a leader in the field of Islamic banking in Malaysia. Bank Islam has been in operation since July 1983 and was originally established with the purpose of assisting with the financial needs of Muslim populations of Malaysia. The bank focuses on constantly expanding and enhancing its portfolio of Sharia-compliant products and services. Bank Islam Malaysia corporate governance focuses on the highest standard by enhancing stakeholders' value and build consumer trust in line with BIMB Holdings' position as a premier Islamic financial services provider. The bank also includes the practice of Islamic principles for the benefit of the community and are committed to ensure that the right executive leadership, strategies, and internal controls for risk management are acceptable in order to achieve the highest standards of business integrity, ethics, and professionalism to company and subsidiaries. Besides that, Sharia acts as overarching principle in Bank Islam Sharia Supervisory Council (SSC) that will oversight accountability on Sharia matters. There are 3 functions of SSC and 1 Audit and Examination Committee (AEC) that are: the first one is Sharia Review Function that will review business operation on regular basis to ensure the Sharia compliance. The second one is Sharia Research Function that is to conduct in-depth Sharia research prior to submission to Sharia Supervisory Council. Next, Sharia Risk Management Control Function that will identify, measure, monitor, and control Sharia non-compliant risks. And lastly is Sharia audit function that provide independent assessment and objective assurance designed to value as well as to improve Bank Islam compliance.
Next is about law and regulation used by Bank Muamalat Malaysia. Bank Muamalat is fully fledged Islamic financial institution offering service and product compliant with Sharia. The bank, which was founded 1999 by the amalgamation of Islamic banking asset from the three legacy institution, that was the second full Islamic bank to be incorporated in Malaysia. The current majority shareholder is DRB Highcom of Malaysia, with Khazanah Nasional Berhad also holding important interests. Bank Muamalat are follow rules of Sharia concept by Islamic Financial Service Act 2013. The Financial Service Act and the Islamic Financial Service Act 2013 come into force on 30 June 2013, Malaysian regulatory and supervisory system. The IFSA is the culmination of effort to modernize the law regulation, the conduct and oversight of Islamic financial institutions in Malaysia, with a view to ensuring that the law remains appropriate and efficient in preserving financial stability, fostering inclusive growth in the financial system and in the economy, and providing adequate consumer security. Bank Negara Malaysia, with the requisite regulatory and supervisory power to fulfill its broad mandate in a more dynamic and interconnected environment, taking account of the regional and international nature of financial development. This involves an increased emphasis on the preemptive measure to tackle issues of concern within financial institutions that may impact the interests of depositor and policyholder, as well as the efficient and effective functioning of the financial intermediation. For conclusion, it is essential that Malaysia's regulatory and supervisory system be adequately prepared, respond effectively to new and emerging threats in order to maintain trust in the financial system and not disrupt the crucial activity of financial intermediation that are vital to the economy. In a single legislative structure for the conventional and Islamic financial sector, the FSA and IFSA combine several different law regulating and financial sector. That's all from me. Thank you.
Next, I'm going to talk about the law and regulation of Affin Bank. Affin Islamic Bank Berhad is a wholly owned subsidiary of Affin Bank Berhad, was incorporated on 13 December 2005 and officially operates as stand-alone Islamic bank with effect from 1 April 2006. The bank, through their priority Islamic policy that has been adopted across the group, are elevating and enhancing financing portfolio. The board, in carrying out its functions or duties, need to have regard to the interests of depositors or policy owners of the bank and participants as defined in Islamic Financial Services Act 2013. The Board of Directors, without limiting the generality of Section 65(1) of Islamic Financial Service Act, the Board shall set and oversee the implementation of business and risk objectives and strategies. By doing so shall have regard to the long-term viability of the company and reasonable standards for fair dealing. Besides that, it is to ensure and oversee the effective design and the implementation of sound internal controls, compliance, and also risk management system equivalent with the scale and complexity of the business and structure. The decision of the Sharia Committee on any Sharia issue relating to the carrying of business affairs or activities of the institutions must be mindful of Sharia compliance. Affin Bank Company Act 2016 stated that the business, affairs and activities of the company will be held in accordance to Islamic principles, rules and also practices. Due to this, any transactions that involves any elements that are not in compliance with Islamic principles are prohibited from being executed.
Okay, For the next one is the law and regulation of Islamic banking in Indonesia. In terms of the banking principle, Indonesia has regulated of the banking principle. These principles are regulated in the Article 2 of the Act number 7 of 1992. In this act, it was stated that Indonesian banking, when it run in business, should be based on economic democracy by using the principle of prudence. The word economic democracy refers to Pancasila and the 1945 Constitution of the Republic of Indonesia, which the principle of prudence has no explanation formally. But in practice, it can be mean that business activity must be conducted or run by people who have experience and professional in banking activities. For this reason, the principle of prudence is a must in running banking activities. However, in the context of the objective of banking in Indonesia, this was regulated in the Article 4 of the Law number 7, years 1992, which state that Indonesia banking aim to support the implementation of national development in order to improve equity, economic growth, and national stability towards the improvement of the welfare of the people. In terms of the type of banking is regulated in the Article 5, paragraph 1 of the Law number 7 of 1992. In this article, it will state the banking type are divided into two. Okay, I will present about the law and regulation of Islamic banking in Singapore. Okay, the regulatory regime for Islamic banking and finance in Singapore is different in comparison to other jurisdictions. Currently, Singapore has no specific law on Islamic finance. In Singaporean government takes a fine-tuning approach to accommodate both Islamic and conventional banking within a common regulatory framework. This approach depends on the perfecting process of the existing regulations rather than making a new separate regulations. Therefore, there is only a single legal framework for existing banking and finance system in Singapore, regardless of whether it is Islamic or conventional in nature. The sole regulator for banking and finance system in Singapore is Monetary Authority of Singapore, MAS. MAS is the central bank of Singapore and monitors the development of banking and finance industry. Along the process of establishing Islamic banking and finance in Singapore, a series of amendments are made to the existing law to allow for the operation of Islamic banking and finance.
For the law and regulations of Islamic banking in Saudi Arabia, Saudi Arabia until the mid-20s does not have any formal money and banking system to a degree that Saudis only use coins having a metallic content equal to full-bodied coins for storing value and limited exchange transactions in city areas. Foreign coins only serve as monetary needs in Saudi Arabia. However, in 1952, with the United States technical assistance, Saudi Arabian Monetary Agency (SAMA) was created designed to serve as the central bank within the confines of Islamic law. Several layers is developed intended to serve a number of multifaceted economic, exchange, and regulatory roles. Saudi Arabian Monetary Agency functions included stabilization of the value of the currency in an environment of openness with respect to exchange transactions and also capital flows. There are two major regulatory frameworks in Saudi Arabia. The first one is Banking Control Law that is issued by Royal Decree dated 11/6/1966 that is considered as a document meant for regulating banking activities in Saudi Arabia. In this law, there are 26 articles. Saudi Arabian Monetary Agency is entrusted with controlling banks and money exchange and issuing instructions and has established the Banking Control Department to serve the purpose. The main objective of the Banking Control Department is to monitor and regulate the banking sector in the Kingdom of Saudi Arabia through granting license, issuing the banking sector's compliance with regulations and carrying out inspections, as well as supervisions to ensure the banking sector's compliance with regulations and take impediment actions to establish justice in case of non-compliance. The second law is the Capital Market Law that is issued by Royal Decree dated 31/7/2003 that was issued to indicate that Capital Market Authority is primarily discharged to the responsibility of carrying out regulatory tasks of Saudi Arabian market, specifically by providing fair, transparent, and organized financial market that protects investors from illegal practices that include fraud, scam, cheating, or manipulation. In conclusion, Malaysia has taken a bold move in standardizing their regulatory framework through Islamic Financial Service Act (IFSA) 2013 as the first step to motivate Islamic banks to more effective development. Starting from the establishment for the first Islamic bank in 1983 and afterwards with the liberalization of the Islamic financial system, more Islamic financial institutions have been established. Nowadays, Malaysia has become a full-fledged Islamic bank providing a broad scale of financial products and services based on Sharia principles. In experiencing several stages of development, it has transformed Malaysia into one of the most developed Islamic banking markets in the world. The growth and also the development of Islamic banking industries are supported through governance and its overall legal frameworks. It is very important to have standardized law of practice as Malaysia has become one of the common law countries which can systemize both Sharia and also civil law in the content of Islamic banking in Malaysia. Thank you.
Allah